Welcome to the Passive Investing Made Simple show. I'm your host, Whitney Elkins-Hutten, Director of Investor Education here at passiveinvesting.com. And I am curious to understand today if you are asset rich but cash poor. Are you in the spot with your portfolio? Maybe you own your own business. Maybe you're a high net worth investor or a high net worth earner helping build somebody else's business. And you're just like, I have tons of assets, maybe in other real estate, stocks, bonds, and mutual funds, building my own cash flowing business. But that's my only source of wealth, and that you don't have income coming in on the side. If that's you, we are going to solve that conversation here today and start arming you with some tools that help you start making the shift from being asset rich to an income poor to asset rich and income rich too. Now, if this is the first time we're meeting, we do this podcast live, webinar live every Tuesday to help you learn the ins and outs of passive investing. So you can learn how to take your active income and savings and turn it into passive income and long-term wealth. Maybe you've tried investing in a deal before, but couldn't quite get comfortable making the investment, or you actually invested in a passive deal before and then realized, oops, that deal is not going to help me achieve my goals. I did something wrong. I pulled the trigger too fast. Or you are a seasoned investor and you simply just want to sharpen your skills. If that's you, you're in the right place. And if this is the first time we're meeting, again, my name is Whitney Elkins-Hutten. I have accumulated over 800 million in active real estate holdings in residential and business. I have done the flipping, over 5 million in real estate assets. I'm the Director of Investor Education at passiveinvesting.com and have helped investors understand my own investing journey in my book, Money for Tomorrow: How to Build and Protect Generational Wealth, which you can snag here off of Amazon.com or Bigger Pockets. Now, I do this. I invest not only actively and passively in real estate, um, in service of one result, which is how can I get 100% control and choice on how I spend my time? And I want to help you do the same. All right. I feel I am very much a believer that if you had 100% control and choice on how to spend your time, if you had enough income coming in that to be able to dictate how you work, when you worked, and how much you were going to earn, that we could actually solve a lot of the world's problems here. And we can help you do that, in passiveinvesting.com. We have over 2 billion of assets and acquired under management on the equity side. But what I want to kind of clue you in on today is the power of investing in real estate debt funds, and how we can actually help you create that monthly cash flow and turn it into freedom. So stay tuned here. All right. Now, if you want to, grab my contact information here, go ahead and do so. You can join me at passiveinvestingwithwhitney.com. And here I have some free resources for you. Doesn't matter if you're new to passive real estate or a seasoned investor, I got something right there for you. But more importantly, I can jump one-on-one on a call one-on-one with you to help you understand how to meet your investing goals. Now, we're going to be talking a little bit of numbers today. How do we make this shift from being asset rich, income poor to asset rich, income rich? There's going to be some math. But I want you to understand it's educational purposes only, not financial, legal, or tax advice. So make sure that you take anything back that we talk about here today and consult your investing team before making an investment decision. All right, let's figure out how to turn the wealth you've built in your life, okay, whether that's through your high income earning position or through your own business that you've built and scaled, into the life that you want to live, right? We were not put on this earth here to work every day for the rest of our lives, okay? It's got to be some play. But I know if you're here, you're a builder, okay? You're either built a business, you're in a kind of a C-suite position, manager position, director position. You're building a business either as an entrepreneur or you have built your own business as an entrepreneur. But regardless, you've built something remarkable. You have great discipline and vision. You know how to reinvest your time, your energy, employee power, right? You know how to engineer income, either for somebody else or for yourself through your business. But here's the thing. We don't want to replace what you've done. We want to honor it. We want to make a shift and help you take the same skill set, same discipline and vision and reinvestment skills and build the cash flow, that next business, the cash flow business, the one that pays you while you rest. Okay, that's what we want to do here. Okay, why this matters right now to talk about this is spoken to so many passive investors or investors in general, and the light bulb is coming on for them that net worth does not mean that it's going to cover my lifestyle. Okay. Maybe they have a lot of net worth tied up in their business valuation or in their home equity. That net worth tied up in your business and other equity and other assets earns you a big fat zero, unfortunately. And it's not easily accessible unless we take a loan against it or we sell it. All right. I want to show you a path here today to where you don't have to do either one of those things unless you want to, in order to be able to build that next cash flowing business. All right. Now, point number two, why this matters is without income, you're still working, right? You're just managing a different asset. Okay. Wealth is only as good as your ability to use it, right? So you can have a ton of assets, but if you can't actually get the equity you've invested to kick off cash flow for you in a consistent, persistent, and predictable way, you're still going to be working to build more assets. And in order to access that valuation, you have to sell them. That's how a lot of investors become asset rich, but income poor. All right. But again, we want to start making this shift very intentionally, not reactively. So how do we do this? Okay. Or actually, let's talk about first, like what happens if you choose to kind of ignore this, what we're doing today, and you don't make the shift from being asset rich to asset rich and income rich? Well, one, we've got some unrealized potential, right? You never really get to use what you've built. Okay. That was part of my journey, is I scaled several $1 million of assets. But it wasn't until I started injecting a lot of that debt layer into my portfolio that finally the cash flow stabilized, right? And until I did that, the only path I could see is that I was going to have an extended commitment. It's going to have to continue to build more and more assets in order to overcome that cash flow hurdle that I didn't have. All right, which meant I would be taking on a lot more excessive risk. And maybe I get to the end anyways, and when I want to retire entirely, and then I was going to be forced to liquidate some of those assets and rely on asset sales, maybe in the wrong time in the market. Now, I'm talking about myself as a real estate investor. This applies possibly to you if you are experiencing a similar path in owning your own business. All right. So what's the income shift? Okay. If that's why we should care, what are we actually talking about today? Well, we want to take all that growth that you've already done, okay, in building your assets, maybe it's through real estate, or in your own business. And we want for you to kind of start peeling some of those assets off to get it to do another function, not grow exponentially, but how do we get it to actually pay us monthly, right? So we can actually go buy groceries with it. We can travel with it. We can actually, get the things in life that we want to have. Okay. So your before picture might look like you might be 90% reinvested, double downing on growing your real estate portfolio, growing your own business. Maybe it's an HVAC business or a printing business, advertising business. I don't know. But maybe you're solely focused on growth, which, by the way, I want to recognize as a builder, that is huge. You're taking huge bets on yourself. You should continue to do that. But what we want to do is make sure that we're starting to transition to a balanced approach. That's it. when we continue to double down and reinvest all of our profits, we might forget to look at liquidity. Okay, what are we going to need not only for today, but also in 5 years and in 10 years in order to start living our life? And when we are continuing to build and build and build and build and build with assets, okay, and locking up our capital, we actually get limited access to that wealth because of the liquidity feature of it. Okay, that can be great, right? We protect ourselves from our own self from making, challenging investment decisions, but I have never fixed and flipped a property and been able to pay for my monthly groceries. It was the cash flow that I brought in that paid for the monthly groceries. All right, so let's start thinking about the balanced approach when we flip to the other side of the equation, the income shift. Okay, we start inserting assets that have strategic liquidity, that are very focused on income generation, and have a way that we can invest that actually can give us continued growth so that they're very flexible. I'm going to show you how. All right. I want you to know that as we start kind of taking assets off the table from pure growth into this income shift, income isn't about the enemy of growth. It's actually your reward for the work you've already done. All right. So we've talked a lot over the past several months about the three-tier income strategy. Okay. This is my three-tier, investing approach. I don't think I can hammer this home enough with people right now. One, we want to make sure that we got tier one liquidity and savings. I know we usually flip it upside down. Tier one's the pyramid on the bottom, but we're going to roll with this today. We've got our tier one liquidity. That's going to be our high yields savings account, money market, CDs, bank, insurance-backed cash value life insurance. Okay. All right. Yeah, we're getting a little bit of return, but that is going to be like where our safety blanket is, our cash reserves, that 3 to 12 months worth of reserves. Tier two is going to be more predictable. Okay, that's going to be our cash flow type assets. I like using real estate debt. Our returns we can expect somewhere between 6 to 12%, depending on what kind of risk we take in there. Maybe some tax advantaged income funds in there. And then tier three is our growth tier. Okay, that's going to be real estate, equity, private credit, dividend paying businesses. Okay, think of it this way. We want to take part of the value out of your current business and your current holdings, equity holdings, and start shifting it to make sure you have the liquidity in place and the cash flow in place to give you a income-rich lifestyle. Okay. Now, it doesn't mean that you have to go all in. This doesn't mean that we have to take $1 million out of your portfolio and put it all in a, real estate debt fund investment. We could do that. I encourage people that are kind of new to this framework, especially like my business owners, is that we're thinking of this as a rebalancing strategy for a long-term or alongside our long-term growth strategy. So think of it this way. How can we, on a continued fashion, maybe every quarter, take 10%, maybe upwards to 30% off the table and start putting it into income producing assets, okay, like debt funds to prove to yourself that this is a great strategy for you, a great complement to your portfolio. And then continue to increase that allocation over time as you get comfortable. All right, I'm going to show you some math here on how somebody can actually produce almost $300,000 a year with a simple $100,000 investment. I'm going to show you that to you. Here's the thing. When you are doing this shift incrementally, you stay in control, and which is what we want. Now, I'm going to kind of talk through a business case here. I had an investor, in my network. She owned a business. She decided to liquidate the business. She was like, Whitney, I need cash flow. I need out. This is like gonna like rack my brain. Like, I don't know how to retire. Now, she had already listed the business to sale, had it under contract before her and I started working together to create the cash flow. So she sold her business for 1.5 million. She was bringing in a little bit, but not as much as she wanted. We simply just shifted 500K of that 1.5 million sales to start generating 3,700 a month while she went to start on her next adventure. She was like, Winnie, I just need about 3,500 coming in a month, predictably, reliably, in order for me to feel great about my next business adventure. I was like, great, we can make that happen. Let's peel this off. This gives you plenty, $1 million to go play with to build and scale your next opportunity. But here's the thing. What if Meg didn't liquidate her business? How could we achieve a similar or better result as if she had taken a different kind of a gliding approach? So what if she decided to, several years ago, start investing $100,000 a year from her business cash flow into a tier two asset like a debt fund investment that yielded, say, 8 to 10%. Now, for the math on that you're seeing on the screen, I used 8% compounding. All right. We went very conservative here. So, as you can imagine, as this grows, you might hit 10%. Okay. And we just did that methodically, set that 100K aside, which she easily could have done, and allowed it to compound for 15 years. What if we did that instead of selling the business? After 15 years, she would have had two businesses. She would have had a cash flowing, income producing investment business that had a valuation of $2.9 million. And she could have used that principal to invest in a income producing, keep it in a tier two asset that was at this point in time, she could have qualified for 10% annualized return. That would have kicked off over 290K annually for living expenses. For her to travel, maybe for her to hire an operator to bring into her business, right? She could have used that income any way she wanted. That would have allowed her the flexibility to where she could have retained ownership of her original business, brought in that operator that she needed to in order to get her time back, and then maintain control over that business until such time her kids were ready to take it over. All right. She would have had two assets, not just one. Okay. She wouldn't have been pressured to sell. All right. So, this is something that I'm very passionate about, helping people understand that yes, we want to scale assets, but there's a reason why we want to do them in tandem with what we're building actively and also have a passive business that we're scaling passively. Is so we get that cake or eat it too type situation. So if you're new to this, how do we get, dip our toe in the water? How do you do this initially? Well, first quarter number one, okay, we're not picking the quarter, we're not lining this up to the quarters of the year. You could, if you wanted to start this in 2026, but you just say the first quarter, you're going to sit down and identify your income gap need, all right? And the timeline that you want to achieve it, and then how much free capital you could set aside to invest. Now, that might be savings. It might be cash flow that you peel off from your current income that you're bringing in for work or income that you're bringing in from your business. You just peel this off, right? Then over the next 2 quarters, I want you to start adding in income stream like investments that yield that 6 to 12%. Cash flow investments, we're not looking for equity growth or tax benefits or anything here. We're just looking for the stable, predictive cash flow. And then in Q4, I want you to start playing around in that cash flow business. If you don't need the cash flow, reinvesting that capital and continuing to grow it. You're going to start seeing a snowball effect. It's going to build and build and build faster and faster, faster. And as always, I want you to always evaluate your progress and your assets before you reinvest. All right. What you'll notice in a couple years is that with this continued investing and income stacking, you'll start to meet your income needs to give you that lifestyle flexibility to where, hey, I might have to sell my business in order to get financial independence or financial freedom. This might not be an either or situation. It might be an and situation. I get to keep the asset and it produces a cash flow and I generate another asset over here. All right, so where do we go from here? First, I want to honor you and recognize that as a builder, as somebody who has scaled either as an entrepreneur or entrepreneur, that is no small feat. You've built assets, okay? We simply just want to make that little bit of shift, of shifting your focus to start building income alongside those assets and start implementing a strategy with intention. Design it, or we're designing it. Now, we're going to move into next week where we're actually literally looking at all the different types of income producing assets that we could be going into um, in real estate, outside of real estate, and how you can start putting together a plan on inserting this income layer tier into your portfolio. Now, as always, you can find me at passiveinvestingwithwhitney.com. There, I've got a wealth of resources for you. No matter if you're a beginning or an advanced investor, I've got resources for you to help solve your, whatever step you are on your investing journey. And you can also get one-on-one time with me to discuss your investing goals.